This is FinTech Futures at Sibos, and I'm joined by Andrew Davies of ComplyAdvantage. Andrew, thank you so much for taking the time out to come and speak with us. Just to get started, let's get a quick introduction to yourself and your role in the ComplyAdvantage.
So my name's Andrew Davies. I run the Global Regulatory Affairs team at ComplyAdvantage, which means that we support our organisation in making sure our solutions are consistent with market trends and consistent with the needs of our customers to support them in managing financial crime risk. And I've been in the space for quite a long time, so I've seen that sort of evolution from when we started doing transaction monitoring for something like terrorist financing all the way through to where we are today with more real-time payments and managing risk in the context of those type of payments.
Excellent, excellent. So, what would you say is shaping the financial crime landscape today?
So there's a couple of things. So the first thing is criminals will take advantage of any disruption in the industry. So they're entrepreneurial, they're not worried about different compliance obligations, they're singularly focused on committing financial crime. So with the transformation of financial services around the introduction of more digital channels, with the advent of more real-time payments, money moving more quickly, the criminals will try and take advantage of that transformation. Now that transformation is good, better customer experience, a broader portfolio of companies that are operating within that financial services ecosystem, and money moving more quickly, great services for corporates, for institutions and for individuals. Criminals will try and take advantage of that disruption. That's sort of one dimension that's sort of shaping the financial crime landscape. The other thing is the regulatory landscape. So broadly, regulators around the world and they're not just interested in something as basic as money laundering or fraud, they're looking at the predicate crimes for money laundering. So there's been this sort of movement from a regulatory perspective to say, okay, there are these predicate crimes which are particularly nefarious. It could be human trafficking, they could be the illegal wildlife trade. So for example, $23 billion annually is laundered from the proceeds of the illegal trafficking of wildlife. 50 million people are subject to human slavery. So the regulators are now focused on those underpinnings to money laundering. So the transformation of financial services, criminals will try and take advantage of that disruption, and then the broader purview in support of the sort of moral imperative, they're really driving the financial crime landscape.
Excellent. And what kind of actions then are global regulators taking to deal with this evolving landscape?
Well, I think there's a couple of things. The first thing is, with direction from things like the FinCEN national priorities, certainly the Monetary Authority in Singapore, the FCA in the UK, and then the definition of these predicate crimes from under the sort of AML directives of the European Union, that's brought to the fore this sort of idea of making sure that financial institutions and the broader ecosystem of financial services companies are focused on those predicate crimes. Now, there's, we want to maintain the integrity of the financial system. We want to make sure that we're protecting our customers, and we want to make sure that we're stopping the criminals. Right now, it's estimated that 2 to 5% of global GDP is laundered through the financial system annually. It's been that figure for 25 years. So the regulators are now saying, okay, let's try and solve some of the fundamental problems, and let's potentially collaborate more with the financial services companies. That's that sort of what I've seen as a transformation in the way that regulators are dealing with these types of problems. It's a problem that needs to be solved with data. It's a problem that needs to be solved with collaboration.
Excellent, excellent. And how can banks leverage effective financial crime risk management then to drive a competitive advantage?
One of the sort of interesting figures is 2/3 of people that are subject to fraud at a financial institution will consider leaving that financial institution. So I think making sure that your organisation is supports integrity and security around the customer relationship is sort of an important differentiator. It needs to be, integrity and security need to be synonymous with your financial services brand. Mm-hmm. And the way that you can protect your customers, protect your organisation and ensure compliance obligations is first and foremost driven by data. Right? We have more data. We're at an inflection point in the industry now where we have more data. We should be able to make better inference on that data to support the idea that we can stop more money laundering and stop some of the predicate crimes for money laundering. So start with data, and of course the data that we need is driven by the problem that we're trying to solve. Here we're trying to solve some of those predicate crimes, we're trying to solve money laundering, we're trying to prevent fraud. So data needs to solve those particular problems. And then of course overlaying the data, there's two ways I use the data. The first thing is in different types of monitoring. how can I get all of the data points that are indicative of certain type of financial crime? So for fraud, for example, something like account takeover, the indicators are beyond transactional indicators. So make sure I've got the right data supporting the right business use case, and then how I present that data to my analysts to make sure that they're efficient and they're not overwhelmed with false positives. So there's some of the things that financial institutions can do, and they need to do that through the lens of not introducing too much customer friction, but also maintaining the managing their risk and supporting everything in that real-time context.
Now, obviously, there's a cost factor there as well. The cost of financial risk, crime risk management is rising, but the big question is, does it have to?
It certainly doesn't have to. So, and the reason why it doesn't have to is because there's more advanced technology to make more accurate inference on the data. Because the perennial problem has been, I need more people because I've got too many false positives. And of course now we have the data that can give us more accurate detection, and we can prioritize the cases or the alerts that investigators are looking at to make sure that they're using their sort of spidey sense to actually to detect and prevent legitimate financial crime. So the human capital doesn't need to expand exponentially as transaction volumes increase and as things happen more quickly, as long as you're using the right data, which is the fuel that drives this risk management, and then the right inference techniques on top of that data. That's how you can stay on top of this sort of trend of rising costs of financial crime.
Excellent. And just to finish off quickly, I mean, have you got anything else in the pipeline at ComplyAdvantage that you can tell us about?
Yeah, well, one of the interesting things that we're working on is because we're overwhelmed with, as a society, we're overwhelmed with data. One of the things that we're doing is we use a lot of natural language processing to curate and procure and curate data. And then the really fascinating thing is, we live in a world that's interconnected, right? The interconnectedness of things. And we're trying to draw together all that data and show not only if your customers are exposed to risk, but also look at proximity to risk within sort of graph analytics. And that can draw together different types of data like transactional data, adverse media data, PEPs and sanctions data, beneficial ownership data, draw it all together so you can apply graph analytics, and then you can present this sort of network of relationships to your analysts as they're conducting their investigations. And everything can, of course, be updated at the speed of financial services at this point.
Excellent. Well, thank you so much again, Andrew, for taking the time out to speak with us. It's been a pleasure.
Yeah, my pleasure. Nice to meet you.
Thank you.